read books and learn new habits. Money to the people, 500 billion, 600 billion. That's nothing.
If someone just offers you money, you're not going to say no.
Okay, everybody. Season 2 of DNA Money Podcast, and we got ourselves a nice table.
Yeah.
Yeah, my friend, he's a crazy one. So out of nowhere, one day he just comes in and he's like, "Yeah, I got you a present." And he brought this casino table. It's a blackjack table. So I was like, "What the hell?" I was like, I couldn't believe it, but here we go. We have a casino table, so we're gonna play it up.
I'm sure he's going to enjoy this episode.
Yeah, I'm sure he's gonna be waiting for it, and maybe one day he's gonna join us too. But yeah, we got a casino table. I put on bunch of cards on it, money. So yeah, now we're rolling. We gotta get 2 cigars and be just smoking in the middle of it. We gotta put on some casino themed maybe lights, and then maybe some banners, casino banners. Let's play it up.
We don't have any windows. We don't have any watches. So
See, we already
Almost-
have a casino.
Yep, halfway there.
We'll put in chips, maybe the casino chips. I don't know if the light's gonna stay. Let's see. So far, it's been pretty good. On one of our videos, I noticed that whenever it's yellow, you actually look super yellow.
What the?
Like somehow.
That
I
sounds racist.
Yeah, that is. But I think that the iPhone 11, it's kind of yellowish. It gives yellowish tone to everything. I think whenever they released it, everybody was like noticing that how yellow it is.
Interesting.
And so I'm feeling you on iPhone 11, and whenever it picks up any yellow, it just blows it up. So, and even the white lights don't help. Maybe actually once we turn down the
The
ceiling lights, they were yellow, so maybe it's gonna be more balanced, white balance now. But let's see. Yeah, but here we go. I guess season 2. He kind of guessed it when we were like, oh, last episode we was like joking, like, oh, that's last episode of the season, and
Let's get something
let's
new.
get something new. Let's get started
Yeah.
on the season 2. It's gonna be different show. Little did I know he had something planned for us, but yeah, I don't know where he got it. He said he got it from a casino. I don't know how he did it, but yeah, he was like, you guys need to bring more money energy in it, and the casino is all about money and all that
Yeah.
stuff. I was like, okay, sounds cool.
Nice. No, let's we'll check it out. We'll check his theory, see if the money starts flowing in. Well,
Yeah.
I'd actually like to see just more, I guess, views and followers or subscribers. That's gonna be enough.
Yeah,
for me.
let's bring the followers energy, and then not the money energy, but
Just yet.
yeah, but at least I mean, it looks interesting now. At least some eye candy. Maybe we'll do the thumbnail for the videos, add some casino theming there, or I don't know. Let's see.
Yeah.
Maybe we'll just make a top-down picture of it and make it our background or something. Because even have you seen All In podcast?
Well, I only saw the preview
Mm-hmm.
because I think you showed it to me once.
Yeah, their intro is like poker
all about
table.
yeah.
Like money and cards flowing around. So
It's interesting because I guess that
I don't
it's implying the probabilities, the game of probabilities, right? And
know.
and like gambling somewhat. Because they only talk about tech investing,
They
right?
do talk about economy
everything.
in general, mostly tech
Mm.
because their backgrounds is in tech, but
Yeah.
economy in general. But casinos have like kind of a bad connotation. I mean, justifiably, I guess, because people lose a lot of money there, ruin their lives and stuff like that. But the last president was a casino owner, so I don't know. I guess you can make it even if you're associated with casino
Yeah.
to the highest level. So I'm not too stressed about that aspect of it, but yeah, it's kind of a let's embrace it. I'd say let's embrace it.
It would be
Embrace
cool
the
if we
money.
invite guests. Like each invited guest would have to we can make them sign on the table. Just leave the signature there.
Yeah.
And as the time goes, we'll have more and more signatures and less space. So it'd be cool.
That's pretty cool. It actually has enough space for a third person to sit down. Maybe even fourth if we are super scrappy.
Yeah, we'll just have to see how we can move the table around.
But pretty cool.
It'll be cool, man.
I have no idea how much it costs or whatever. If it's even legal to have it, who knows? Probably is whatever.
And we can earn some money by running underground blackjack games or whatever.
Oh yeah.
On weekends.
Sure. And we're not gonna do that, but
No, we're not.
yeah. So recession, and we are throwing money around.
Yes. Yes, I guess it's been not a pleasant week especially for crypto investors and
For everybody, I think.
for everyone. And stock market is down. I think year to date it's down by 19%. I think we're officially in a bear market territory.
We have been, I think, for a while now. I mean, they can.
I think since last week actually, because it has to go down by 20% since its all-time high. I mean, all-time high, 52-week all-time high. And I think we've been in that territory since last week. But man, crypto is bleeding right now.
Yeah, crypto. Bitcoin is under $19,000.
Yeah, it's at 18 something.
It's not that crazy though. I still believe it's not that crazy. I mean, back in the day, it went from 20,000 to 2,000. Like it was just 3 years ago that happened. 4 years ago. Yeah,
I think last time I checked, I think it went down by 70 to 80%.
When?
In 2017.
No, I think it was like 90% because it was at 20 or 22,000 and went back to 2. So that's 90% there.
Let's
check it out. But
but Ether is or ETH is down significantly as well.
Yeah.
I think that's at 980.
Yeah, I think it's over
Right
1,000 now at the moment, but you can double check.
So in December 2017, it peaked at 19,650. I'm talking about Bitcoin, and then it crashed.
Are you looking at the graph or 52 weeks?
No, I'm talking about the graph.
Yeah, because the graph it might not capture the very top.
I mean, let's say it's 20,000.
Let's say 20.
Then it bottomed out. So it went down at first 4 days after it was down to 12K. Then 4 months after it went down to 6.9K, so 7K. And then it bottomed out before starting to go up. It bottomed out at 3,000, 3,500. So 20 went down from 20,000 to 3,500.
So whatever, let's say 80% down.
Yeah, that's insane.
Yeah, and right now it's like 60% down.
So November 12, 2021, Bitcoin peaked at 64K, and now it's at 19.7.
Yeah.
So 64. What is it then? It's like 44K decrease.
60%. That's it. 60%.
Yeah.
So it's not as bad as it was last time.
Yeah, 68% down. Yeah, it's not as bad. I think it can still go down, right?
It
Hopefully
has space to go. It depends. It depends what's gonna happen. If the jobs are gonna get lost, if the Fed's gonna start burning money, we're gonna go lower. I think they're gonna like try to crash the economy like to abyss. I think I like whatever they say. It's bullshit. He's coming out. Yeah, he's coming out and talking about, it's going to be a soft landing. We have a lot of strong job market, and it's not going to be like the last time when it was in 2008 when like everybody got fired and like the unemployment was around 10% or something like that. And like he's like, that's not going to happen. We are at like 3%. It's going to happen. I think we're going to go like high unemployment. The inflation gonna slow down because people just not gonna have any money to spend. Companies are gonna be fucked up and everything's gonna go to shit. But I think that's by design. They need to lower the inflation by any cost because, I mean, the dollar is a world reserve currency, and if that's get challenged because of the inflation, we are all fucked. So like we'd rather sacrifice poor people and all that. Like, I mean, it's fucked up, but I think that's the strategy.
Yeah, and then
Because
that's why the rate hikes are happening, and
yeah,
that's why the economy is slowing down. But yeah, I think what do you think it's gonna take like 6 months to get to the point where it's not gonna look pretty at all?
I think it's gonna happen sooner. I think 3 months, 4 months. I think we're gonna start feeling it real hard. I mean, we're already kind of feeling it if you're invested in stock market or crypto at all. I mean, crypto, whatever. I mean, not that many people have a big exposure to the crypto markets. The market cap of crypto right now is probably like 500 billion, 600 billion, and it was at a
Probably.
trillion. But that's nothing compared to like real estate values. Real estate is in America is probably all combined worth more than like 50 trillion. I'd guess maybe.
The global crypto market cap right now is 866 billion.
Yeah, and most of it is bullshit anyway. So, because a lot of altcoins, they will have like diluted value and like actual
Yeah.
current value. So it's gonna. I mean, it depends on how you calculate that, but like real estate market is gonna be like just in America is gonna be 60 billion, I think, or 60 trillion, I'd say. The value of all real estate and land and all that stuff. Like all of the companies probably more than that or around that amount. Just in America, bonds, all that. So when that starts to fall down, and I think it's gonna, the bond market. I don't know about the bond market. It's probably gonna go down too, because of the insolvency of a lot of companies. I'm kind of painting a doom and gloom right now. I don't know if that's all gonna be that bad, but
Yeah. I mean, it's hard to say, right? I mean, we've been. I think we've been through worse, right? Like if you're looking at 2008, 2009, I think it was actually worse than what's going on now. But I think looking globally, though, there's like more variables involved into this, right? There's like more
still global shortage of chips is a thing.
Yeah, and like
there's gonna be global shortage of food.
Food, like the war in Ukraine, political tension. Like China is now trying to, I don't know, get into Taiwan or not. Because did you see that they've actually the president there, or not the president? What do they call him?
I think he's the president.
Who's president? The leader of the Communist Party. He signed this document which allows them to kind of do this military operations. In China as well. Citing Russia. So it could be possible that China is trying to get into Taiwan as well, which would suck.
Yeah.
And it'd be interesting to see how the U.S. responds because obviously a lot of the U.S. economy is dependent on China directly.
Yeah.
So
it is all kind of horrible and doesn't look good, but
yeah, I guess the main question is what can people do, right? Like how can they catch against all of that? And we spoke about it in the last, I don't know, maybe 3-4 episodes. By the way, crazy how we've started this podcast right before this whole shit show happened.
Oh yeah.
Or started. But what do you think are kind of like the best strategies for regular people to take on right now?
How regular are we talking? Like the middle income?
Yeah, like low, I guess middle class, lower middle class.
Well, I think now is not the time to refinance your house if you wanted to. I think that's a bad strategy. The interest is high, the valuations are high, so you might get more money, but then you risk of going underwater with your house. So underwater is when you're when the value of the loan is more than the whole value of your property. So, and the bank might call that note if they risk insolvency. So like they don't have enough money to like cover your bad loans. They might call that note and to like limit the risk, and they might just take your house. So probably, unless you're doing something right with the money, don't do that. Don't refinance your house. Yes, you're gonna get a lot of cash, but I mean, unless you're truly doing something good with your money, don't do it. Don't buy a car right now. The new car, it's pointless unless
Yeah.
you really need it. Like
A new car? You mean a brand new car or
yeah,
just yeah,
brand new car. If you want, you can buy a used car.
used one? Yeah.
Yeah, that's fine. What else? What do you think?
I think just save money, right? Don't like decrease your discretionary expenses.
Yeah, invest into learning, invest into providing value. I mean, if everybody stops spending money, the economy is gonna fall down harder, right?
Well, I mean, that's what they're doing, right? Because or I guess what they're trying to do, try to make people save more money because the savings rate are supposedly should be higher.
They're not gonna
And
go
then
higher though. Oh, you mean savings rate? You mean by
like a bank savings rate.
the amount of money people?
Yeah, like the interest rate goes up, right?
It's not gonna go up though,
It's not gonna go up.
because
Why?
the inflation is up. The bank is hedging. So like, if the if the inflation is, let's say, at 2%, and then the federal funds rate is at 3%, the bank can give you 1% in the deposit, for your deposits yearly. But if the inflation is at 8% and the federal funds rate is anything below that, it doesn't matter. They are losing money just by like holding them. So
Yeah, but
they're not gonna give you any interest.
well, but yeah, because
That's what was happening back like 3 years ago in 2019. I think we had federal funds rate was at like 1.5, 2%, and our inflation was at like 1%. So, and they were trying to get to 2% of inflation, and they couldn't. So what was happening is like there is money going around, like to give to savers, pretty much.
yeah, well, but that time you said they tried to increase inflation
Yeah,
back then,
yeah.
but then they should have lowered the interest rates, right?
Not necessarily. So
'Cause-
you don't want to lower interest rates unless it starts to hurt your economy. But see, the interest rates, you want to keep them at some level, like 2-3%, 3-4%, just to have this tool when you need it, so you can lower it to mitigate the recession or some turbulence.
Yeah.
So you can play with it. If you're lowering it when the economy is doing great, it would be horrible.
Yeah, no, for sure. But now, I mean now, so the inflation, because this is a reverse relationship or relation between the savings rate and inflation. If the interest rates goes up, your savings rate go up, meaning that you want to spend less money because you want to save up, meaning the pressure and prices goes down because the demand goes down, and
If the
therefore
inflation's go, if the
and therefore the inflation goes down. That's how it works.
if the inflation goes up, you want to spend as much money as you can. You don't want to hold cash though. So that kind of fuels the inflation again.
Yeah, but they increase the interest rates
They
to
don't
make you
though.
save money.
No.
For
Well,
example,
if it's at the balance, but we're way off that. We're like at 8% inflation. So
yeah, but they're not gonna hike it up immediately, right? They're not gonna make those hikes right away. That's why they're doing it by like a quarter
well, they're not
percentage,
gonna
or
get
like
to
0.5%.
8% anyway. But the hope is that they lower the inflation to the normal point. Like if they increase the federal funds rate, and then the inflation goes down, then maybe we'll see savings APRs. But I don't think it's gonna happen. See, it's not just that the Federal Reserve fucked it up. It's that there are shortages. There are actual shortages of goods in the market. So it's obvious that the prices are gonna go up.
Yeah.
So like I'd expect like inflation at like 5% because there's just not enough goods. So the other way is to like just destroy the middle class, and then like there's not enough demand for the shortage. So they're trying to catch the supply. So supply goes down, demand goes up as they print money. They want to kill the demand by killing the middle class, pretty much. But
By
I mean,
bringing the interest rates up, or
yeah,
yeah, I don't know. I think maybe because let's say the so you're saying that the interest or the savings rate are not going to catch up with the inflation rate because the inflation rate is too high.
yeah,
But what they're trying to do is like to get it down to, let's say, I don't know, 3%, 3 or 4%, 3 or 4%. I think is the is it no? It's 2 to 3% is the target.
2% is the target.
2% is the
Yeah,
target.
he still talks about 2%. I don't think it's reasonable at all to like even think about 2% when there are actual shortages in the supply chain. Like,
Yeah.
how are you gonna make it 2%? Is like a perfect economical condition. How are you gonna get it to 2% when there's just not enough chips, not enough cars, not enough food now? America's still gonna have food. I mean, we're not gonna lose on food, but poor countries are gonna lose on food because America's still gonna buy it. Poor countries are not gonna be able to buy it.
Yeah.
People are gonna hate America again all over the world because we're still eating good and they cannot. Africa is gonna be fucked.
Yeah.
South America is gonna be somewhat fucked. South Asia.
And then the U.S. is gonna blame Russia.
Yeah, Russia's gonna blame US. China's gonna blame everybody.
By the way, in China, the food shortage could be actually quite significant.
You think?
Well, I guess I don't know if that's. Let me take it back. There is a good risk that they could have shortage because there's just so many people and.
Yeah, but they can buy it, I think.
Yeah, but they're like the biggest. Yeah, they're.
China is getting out of being a poor country. It's like GDP per capita is pretty high for urban areas, and like in rural areas they grow their food anyway. So.
Yeah, well, I think this the prices are still going to go up because again they're importing a lot of.
The prices are going to go up, but I think they can handle.
Maybe there's probably not going to be a shortage.
But
it's
Africa,
just going to be more expensive.
Latin America, I think I've seen some footage of whenever the war started and they're in Peru, I think they were rioting on the streets because of the war, because the food prices went high,
right?
Went up like
crazy.
So people started rioting, and then politicians are gonna see that Americans still eating good. They're gonna blame America for buying all the food. I mean, they're not gonna blame Russia. I don't know. Maybe they will, but
yeah. I mean, hopefully.
Who knows?
I mean, we'll see. Yeah, but it's definitely not. It's not something that we like expect.
It's all pretty bad, but yeah.
Yeah, but I guess so saving up would be really important in this market conditions. I don't know if you started personally like saving more.
I've been saving. I've been trying to get my emergency fund up. So I'm at around the point where like 6 months of my after tax money saved up. Around that. So maybe like 1 or 2 months more I'll be there. Hopefully.
With emergency fund, how are you planning on, not losing with the high inflation right now? Are you still gonna just let it sit in the bank account?
Yeah, I'm gonna let it sit in bank account. What else am I gonna do? Invest it in crypto funds that are just exploding. Those crypto tools that used to pay out the yield.
Yeah.
So like you would invest, put money
into stake it, right?
Stake the money in a crypto pool, and it would pay you like 10% a year.
Was it APR? Yeah.
A year. Yeah, that's all. So
it's all gone. Look, and I think that's Celsius. Well, I don't know much about it, but I think it was part of that.
I don't know much about it either. But so the thing is, there is a term for that effect. Is when something happens that didn't happen before, and now it starts to happen to everything. And so I think Luna was the catalyst catalyst
Catalyst, yeah.
a catalyst for like all of those explosions in crypto market, because and of course the downturn, but the downturn is also why Luna kind of lost
Yeah.
too. But that's I think that's why everything starts popping up, because now people know that it is possible to destroy a cryptocurrency and that you can make money on it.
Yeah.
And then they are just exploring those pools, like the yield pools, the staking pools. They're just gonna go
Short
after
it
them.
somehow. Yeah.
Yeah, because people know that it's possible now. It's no brainer. I don't think it's the same people doing it. I think it's a different people doing it, but
Yeah. They just figured it out. No, it's crazy. I mean, I feel like crypto is still such a nascent field where it doesn't have all the mechanisms to hedge itself, and maybe also because maybe the fact that it doesn't have strong fundamentals, is something that's not supporting it. And
well, the fundamentals are that the bonds, they actually like they lend the money that's in the pool, lend it out, but
yeah,
yeah, I guess it's not as widely adopted to be stable. But by the time it's widely adopted, the staking yield is gonna be like 2%, 1% maybe. So like you're taking your risk. I mean, 10%. What do you expect? Like it's gonna be a safe hedge when you're putting money in, you do nothing, no active trades, you're just getting paid 10%. You expect to be safe? I mean, come
there's
on.
always a risk to it. Yeah.
Yeah, like
Well, I guess if
I guess if you're 16 years old and you just started doing it, it kind of makes sense to you.
because it's probably $500 at most.
Yeah, but I mean, if you lived a little, you kind of understand that making 10% like safely,
Just like
that
that just sounds
doesn't-
too good to be true.
Yeah, because I mean, I always come back to this thing that I heard in an interview from one of the Russian billionaires. He was saying that the way to make $1 million is to take 10, buy something, sell it for profit for like $12 million, and then keep $1 million.
Yeah.
That's what he was saying. That's 10%. Now imagine how hard it is to do at scale. Like if you actually would take 10 million bucks and invest it and then sell something for 12, what would it be? It's even hard to comprehend. I mean, for some people it's like super easy because they have some vehicle that's working for them, like investment vehicle or whatever. But like you can flip real estate, whatever.
Yeah.
There are tools that you can use to do it if you know what's up. But for a regular person to actually be able to generate 10% a year with 10 million bucks, and now imagine those pools, staking pools, they are taking like $100 million, 500 million, billions of dollars. Where does that money go? Like what productive assets do they create that people are paying for, and they're paying a premium of 20% for them to split it between you and whatever the platform or smart contract that they are using.
Yeah, what was the mechanism behind that? How were they able to? Was it like a big Ponzi scheme?
No, not necessarily, not always.
Or don't they just mint like more coins?
No,
like create more coins?
No, not always. They just sometimes they do, but usually they just lend out those money and they expect the borrowers to pay it back.
Okay.
They usually over collateralized with Ethereum and Bitcoin. So like usually, so the crypto lending platforms, they're not just gonna give money to you. They're gonna ask for collateral. So you're probably gonna put down like an Ethereum that's worth at least as much as you're borrowing. So like, it's pretty much a mortgage, but then instead of you getting like 70%, maybe they'll give you 50% of the value that you're putting down. So they're kind of over collateralized, which is kind of safe unless the Ethereum goes to shit.
Mm-hmm.
And then you borrowed, I don't know, 100,000 USDT, and now you're upside down. The smart contract is gonna get that money back from, like it's gonna get Ethereum from you, and it's gonna burn it, and then, I mean,
yeah,
and it all goes to more shit, and everybody's fucked. But I mean, it can work. It should work. It's good. it's a good mechanism. It's giving money back to people because those smart contracts are not gonna hold that much. So like the bank is probably gonna get more than half of the money. Like or an investment fund that's giving out the loan. So let's say me and you are giving out the loan to somebody,
Yeah.
and then we are actually getting that money from an investor. We're probably gonna split 50-50 with him. So like if you can avoid a third party like us that is gonna take 50% of the profits from you and just like systematize it through a smart contract. So like some pool that automated, everybody just commits to it and then they vote through crypto governance mechanism that let's actually distribute that money to that business or a person. Then that kind of makes sense. Just generally economically, it's like money to the people and all that. But it kind of breaks when those people have no idea what they're investing in.
Right.
They don't have expertise. Like if it's a crowd of people, doesn't mean that they're better investors than Warren Buffett, let's say. So like, who would you rather give your money to? Like Joe Schmo and 1,000 of them that's pulling money like into crypto accounts, 500 each, or would you give it to like somebody who's in the game and he's gonna take 50% of your profits? At least you're gonna have some profits.
Yeah.
To give 50% away from. So it's interesting how it all works, but maybe at scale it can work. So if we replace, let's say, Federal Reserve, that sounds extreme, or not necessarily Federal Reserve, but like, yeah, let's say Federal Reserve, and we can kind of do some like treasury bonds maybe.
Yeah.
For government. Maybe the government can raise money through crypto, because those are kind of like we go put money into the bank goes puts it into treasury reserves, and they just collect the money in between. Why have them if we can just give it to the Federal Reserve, let's say, ourselves, and collect the CD of whatever 2%, 3% the Federal Reserve gives us. Who knows?
Yeah, no, it's interesting because I think that this could have lasted for a longer time, but because it didn't go through the stress test, because of this unusual.
It is gonna
conditions that we have.
survive. That concept is gonna live on, and maybe we're gonna see more refined versions of it.
Yeah, no, for sure. Cool.
What do you think people should do?
Yeah, no, I think
if they hold crypto, sell it.
if they hold crypto,
I wouldn't sell it though.
I mean, I'm still holding it.
Yeah.
It's at this point, I'm like, I mean, I don't have too much, right? So it's not a large enough amount of money that I'll be like, okay, I have to sell now and at least to save something. Like at this point, I'm like, whatever. If it goes up, it goes up. If it doesn't, then it's okay. But yeah, no, I think, I'm not gonna get any like investing advice. I think that at this point you definitely should just cut your expenses, like save up, because again, if everything goes to shit in 3 to 4 months, you got to be at least partially prepared for that.
Yeah.
And as you said, investing in new skills, and something, maybe extra revenue streams that you could create over the next, I don't know, half a year. I think that'll be definitely useful. I know that during recession, a lot of people actually go to school, like if they have such an opportunity, because, if the recession lasts for, I don't know, 2 to 4 years, by the time you're out of school, the economy is back on.
I think people should go to YouTube school.
Or yeah, like
learn some skills,
learn something, yeah,
and see if you like it. Maybe invest more money in it.
Yeah, I guess what I'm trying to say, like, educate yourself, right, as opposed to.
Actually, I've noticed a trend where a lot of people who are kind of raising money and online, or like for the last couple of years, and like building investments and all that stuff. Now they're starting to teach. I think it's an interesting trend. Maybe they know something we don't. I mean, maybe they know whatever you were just talking about. That people want to learn something when the economy crashes.
When you're saying people who are raising money, you mean for like just
Online.
funds or?
Yeah. They launch, they like promote. Right now they switched from promoting their funds.
What I'm just curious, what funds are you talking about specifically?
So like Grant Cardone, let's say.
Oh, okay.
He was always promoting his real estate, buy my real estate, all that.
Gotcha.
Now there's no promotion of that, but I think he just shit all over the internet with like, I got a new book, I got a new course, I got this, I got that, sales, learn this, learn that. Like you can survive through downturns with this skill.
Yeah.
So he hardcore switched on his priorities.
What do you think his revenues breakdown looks like in terms of actually investing versus selling all the stuff and then
I think
the views on YouTube?
maybe you can go to his. I mean, probably don't do it now, but he's probably not sharing it. But if you go to his videos, he's talking about it. I think he was saying that he still makes more money selling courses and stuff.
Okay.
So he was like saying he makes $170 million a year with courses and his like programs.
It's actually crazy. It says with income from books, events, and real estate investment, Grant Cardone has amassed a net worth of $2.6 billion as of 2022.
I mean, that's
bullshit.
I don't know. Maybe it's true. It's just
$2.6 billion?
Who's gonna pay for his coaching business? Who's gonna buy it? I mean, it's him teaching it, so it's pretty much worthless, right?
Yeah, it's super interesting, and I'm sure
I would be a minority owner in it. I wouldn't buy it though. Like as a majority, what am I gonna do with it if we don't have him? I mean,
wait, what are you talking about?
So like
minority to do what?
Just collect payoffs, like
profits, dividends.
So like I would do that maybe, but I wouldn't buy his business. Like why would I do that? I mean, who's gonna teach it?
Yeah, I mean it's like his personal
his
brand.
Personal brand. It's a large one. It's a crazy successful one, but it's a personal brand. Like you're not gonna buy a personal brand. So if somebody else taught it and he had like 10 teachers teaching different subject, but that would be shit and nobody would watch it.
He has those like coaches, right? Or
I don't know about that.
I think he does.
Maybe.
Yeah. Interesting. Crazy though, 2.6 billion. Wow.
Yeah. And his real estate company, that's worth something. I don't know if it's worth that much.
Mm-hmm.
Like it has a lot of assets, but those assets are leveraged. So I don't know. So
he must be not doing well now.
No, he's probably doing well. Real estate is gonna survive. He's collecting rent. Rent's not gonna go down by much. He's
at least in the big
mostly
cities.
In Miami. Miami is still going up. It's still gonna go up. I mean, Miami is heavy on crypto, but still, it's gonna go up. So I don't know. He's not in LA or whatever. So
yeah. No, interesting. But yeah, I guess there's a bunch of courses online, and like I don't know necessarily if I would probably learn more of hard skills.
Mm-hmm.
Because that's a skill set that you can.
But what hard skill can you? You can
like
learn
even
a lot
like
of hard skills.
Like even like coding, for example.
Yeah.
It's more. How to say that? It has a higher probability of being monetized than, let's say, taking like some sales courses or.
I don't know. Sales job is easy to get though. So like if you have the skill of sales,
it's more of a, I don't want to say natural, but you definitely should have.
Yeah,
but
see,
more of an extrovert.
You can always get a sales job because they don't get paid salary. So from that standpoint, if you're good at it,
you get a small fixed,
whatever. Pennies.
It's commission based mostly.
Yeah, so if you can get a sales job, you can I mean, if you have sales skills, you can always get a sales job because they don't get paid much.
I think actually, especially now, right?
Yeah.
During the recession, because you want to sell stuff or you want to increase
So
sales as much as possible.
it maybe is a
Cut
better skill.
expenses.
And when the tech is going down,
But you see, it's a soft skill that's harder to learn, I think.
yeah,
But depends on personality, though.
it
I
depends.
agree.
There are different ways to sell things too. Some people sell from. I mean, it also depends who you sell and what you sell. So like
What
maybe
industry?
if you're
Yeah.
selling bonds to an investment bank, or not an investment bank, but to a private equity fund or whatever insurance company that like
But you're not
endowments.
likely to learn that over a video course.
Why not? Who do you think they're
Is
who do you
there-
think they're hiring? Like MBAs? They're hiring freaking Joe Schmoes, and they just sit in a call center and call it, like, and then the actual like MBA, Harvard MBA is gonna go and close it. So, but they're following up
Yeah,
on the
they're
leads, and
opening the. Yeah, that could be.
so like, I mean, who are they gonna hire? It's just bunch of like, I don't know.
Yeah, but I mean, you still have to understand finance or that industry
Yeah.
at least somewhat, to
Yeah.
know
But
what you're
so
talking
what I'm
about.
saying is, it depends on what you're selling. If you're selling
Yeah.
flowers, it's a different topic. If
Yeah.
you're selling experiences, it's different. But if you can be very technical and be in sales and succeed if you sell the right thing. Maybe you sell software to engineers.
Yeah, but even if you're, could be, but like an engineer selling to an engineer
There's no engineers.
in sales team.
Maybe they are, but I mean, they're salespeople now, right?
Yeah.
So
See, so
engineer is
like-
not gonna spend his time selling
Right.
unless he's
so
a salesperson now.
so if you're, yeah. So like even when you're selling to engineers, you still have to be like a salesperson as opposed to
Gotta
having
Kinda-
technical background.
yeah.
Yeah. I don't know. I mean, what else? Marketing probably not so much, because usually, like when it comes to firing, the first
Well-
department to fire is the marketing one.
I don't know about that. That's what I heard. I don't know.
But at the same time, marketing drives all the.
all the
revenues, right?
revenue, right? So, and you wanna, so probably the marketers are gonna, a lot of marketers are gonna get fired, but the good ones are gonna get hired though, because you wanna get more of out of your dollars, and people are gonna
Yeah.
be prioritizing the better, the ad streams. So like if you are just throwing money around, putting like money into banners or whatever, and that was kind of hard to measure, you don't know what's up, people are gonna like, and if Facebook is the thing that's working for you, then you're gonna just put all of your money into Facebook instead of maybe putting it in TikTok or whatever. So like whatever was working for that person, they're gonna find the best marketer in that area and invest into like that marketing source.
Yeah.
Does it make sense?
Yeah, on that platform,
Mhm.
whatever generates the best. Yeah. Interesting.
So I mean, every industry is gonna survive with the right approach to it, but you might want to like improve your skills in that industry to survive in it. So like if you're an engineer, learn more about engineering, get leveled up.
Yeah, and it's. So you're saying that it's better to focus on what you're doing as opposed to
Yeah.
learning new things?
Yeah, I think so. Right now,
Hmm.
because in a downturn, let's say for engineers right now, a lot of engineers got fired, and what are you gonna go hire a junior if there are so many seniors
Senior
floating
ones,
around?
yeah.
You're
Well,
not
if
gonna-
you have an ability to hire, right?
What do you mean?
Because I mean,
Well,
companies are firing people because
Companies are
there's
still gonna hire people, right? Some companies are growing, some companies are shutting down, some companies, people, I don't know, left, died.
Yeah.
I mean, there's hiring.
But
going
you're
on.
you're also saying in the previous episodes that like the senior engineers are very unlikely to be fired, just because
Exactly.
there's a shortage.
So there's gonna be too many juniors on the market.
Yeah, in that case, it's good to improve your skill set for sure. Now, I think for my industry, right, and again for our audience, I work with a venture capital firm, and for us, it's actually a good time because you can find investment opportunities at a lower price because the valuations are finally being corrected and they go down. So I see it's already taking place, right? Those
But
the
is
correction,
it
and
harder to raise money?
it's way harder to raise money now. Yeah.
So it's
So if you raise money, if you close the fund before this happened, then you're in a great position because you're just buying everything at not a discount. Honestly, it's
Mhm.
just a fair price. Maybe you can press or give a bigger pressure to the founders and decrease the valuation even further.
So would you say we're back to normal rather than in the deep shit?
Yeah, I would say that I think we're just back to normal now. Comparing, let's say, pre-2019
Mhm.
valuations. I think we're probably, back to that level. But it's interesting how the tendency to pressure, like to put some pressure on the companies is just because founders know that in general investors now are looking
Mhm.
to pressure them. They're okay with reducing their valuation.
Mhm.
And you can also say, well, the markets are not doing great. Just got to bring it down. So that trend definitely, I guess, helps.
Mhm.
And second of all, there's not that much capital available right now. So founders don't have that much luxury of picking the term sheets that are being
Mhm.
given to them by different investors. So that's an interesting one. I know that for some funds, their investors are starting to starting backing out. Now that really sucks because even though
Yeah.
they committed money, they can still back out under their different terms. Some more favorable, some less favorable for those investors, but it's definitely painful to see like that chain reaction
Mhm.
that follows from public markets to private markets.
Yeah. So if you think we're gonna go, so how far is it gonna go in the venture capital space?
I mean, we're already seeing like 30% reductions in valuations.
Just 30%?
Yeah,
That's
on
not much.
average. On average.
Mhm.
I think it depends on the industry, right? Like in SaaS, it was so overvalued. Hard tech was overvalued too, but maybe not at such crazy, revenue multiples that we've seen with software businesses. What else? We're seeing more of like flat rounds happening, meaning that companies are raising at the same valuation that they were raising their
Mhm.
previous rounds. Down rounds, I think, will start happening more and more because I just hear more conversations about that. And yeah, but again, if you're a great founder, I think you still have a great chance to, close at a good valuation and then attract good amount of capital. But this like concept of smart money is not that important anymore. I think people are just looking for money.
Yeah. I think, yeah, it's still important though. Smart money and
No, it would be great for founders, right? Because if you get this money and you at the same time you get a strategic help from investors, and it's amazing. But like in this conditions, if someone just offers you money and they don't have connections in the industry, but they still offer you money, like you're gonna take it. You're not gonna say no.
yeah, it depends at which stage your company is.
Yeah, I'm talking about the early stage.
Hmm.
But yeah.
I mean, in the later stage, that's more pronounced, I think, because you have a lot of employees, you already have tractions, you have a lot to lose.
Yeah, in late stage, you're just looking for capital mostly, and
Mhm.
for investor who can follow on later.
Yeah.
That's what you care about. Yeah. But how's your app going on?
My app,
Are
I
you thinking
haven't.
of raising?
No, not yet. I haven't focused much on it. Um, yeah, actually, you can see that
Oh, the
on the
code on the
screen that
screen.
there is
Yeah.
code on the screen. There is mocks and stuff like that. But yeah, I haven't focused too much on it. It's still in the early stage. I'm just wiring the banking information in it to my databases. So it still has some time to get any sense. It's
Yeah.
like to look any like anything resembling an app. But I think what deadline should I set? Maybe in 3 months I'm gonna launch a beta
Oh, nice.
with like barely any features, just like maybe categorizing transactions and
Yeah.
calculating each category, how much is there. So maybe in 3 months,
Nice.
if I'm lucky. I've been focusing on reading books, to be honest,
Really?
lately. Yeah, like I've been reading this one book. It's a large one. It's pretty boring and it's loaded with a lot of terms, like financial terms.
Yeah.
But I've been reading it for more than a year. I think it's unacceptable. It's unacceptable. I gotta be faster at this, and I gotta get my habits right. So sometimes I just think it's healthy for my brain to
Get more information.
to read.
Oh,
Yeah,
consumer information.
kinda,
Useful
yeah.
information. Yeah.
I honestly feel better after I read. So after I spend an hour or two reading, I kind of feel like I detox, I'd say, and
Yeah, no, definitely. I think just in general, learning, consuming more new, useful, valuable information.
I'm not even
First-
saying about learning. Like when I learn, I can be on my computer listening to music and reading something, or listening to something. Kind of still gives you this dopamine rush. But when you read, and you just do it in silence, and you by yourself, and you read through things.
Mhm.
I don't know. I start feeling better after it.
Hmm.
So that's
Interesting.
Maybe
Maybe because you're
that's an interesting
focused
side.
completely.
Yeah,
on-
you're focused. You're reading. You're not really doing much. It's kind of a meditation thing, maybe
Hmm.
partially.
Yeah. Yeah.
So
Yeah,
yeah, I
interesting.
kind of somehow I feel that it might be funny that after a couple hours of reading, I see better, I hear better, I can think clearer. I started
Could
to write my notes again. I used to write down a lot of notes.
When you read,
No, like
just your thoughts,
just
like
my thoughts,
journaling.
like yeah,
That's
like
helpful.
new business ideas or something just
Yeah.
comes up in your brain. Most of them are trash, but um,
I mean, I definitely find journaling useful. I don't do it as often as I'd like
Mhm.
to, but and you probably heard like a lot of people say, if you want to kind of clean up your thought process or structure it better, just start
Mhm.
writing it. And I didn't believe it at first that much, but it actually works. It's crazy how like once you spit everything out on the paper, it just creates order in your head,
Mhm.
and then it kind of controls the flow of your mind and of your thoughts, and it's more directed and more targeted.
Yeah, when you think about something and then you put it down on the paper, it might not make sense.
At first, yeah, but
Yeah, because you're like, oh, I thought it was a great idea, but I cannot really summarize it on a paper.
yeah.
But once you get that skill, you're kind of better at explaining things and to yourself at least. So reading, I think it's helpful. So I'm trying to read more. I also noticed that when I read, I usually everything improves. Somehow, like when I read, I'm like, I should probably go to the gym. I don't know, and I go there. Yeah,
Interesting.
and I
It could be a part of your old habit, or like something that you have
could
in
be
your
could
like
be.
wired in the brain.
I also
if you
yeah, maybe.
did you when you used to go to the gym pretty often, like
Yeah,
in the
I
past,
think I was
were you
reading a lot.
reading your
Yeah.
a lot? Yeah.
Maybe that's triggering something. But I also, when I read for a long time, I like to stand up and clean up, just everything.
Damn.
Yeah. So like it puts order in your life somehow.
Wow.
Reading,
That's interesting.
Yeah.
I mean, you
not reading online and reading
yeah, the paper books, right?
paper books. Yeah.
Yeah. No,
Not listening to audiobooks. Audiobooks is same as podcast and all that. It's like
yeah.
you gotta concentrate on what you hear, and people are talking different ways, and it's still kind of dopamine inducing. So
Yeah, and how do you feel about reading nonfiction versus fiction? Is there any
I don't really read fiction,
Yeah.
so but I'd like to get into it.
I mean, for me as well, and even during my college years, I was still reading. I'd say not very much, but I still, spent a good amount of time on in front of the books. and I was mostly reading like nonfiction, like finance, investments, and textbooks. Like those
Mhm.
freaking textbooks are so text heavy, like very dry. And then like to start reading more, you have to like what you're reading, right? So they say read what you love until you love to read.
Mm.
And I have a bunch of like nonfiction books, but I've recently started reading this or continue reading the um, Asimov's
Mhm.
book called The Foundation.
Mhm. It's
Um,
about the space colonies.
Yeah, it's like the space colony and basically how one man predicted the fall of
Mhm.
galactic empire or galaxy empire, and then he set out two foundations that will that are creating, or that's goal is to create the new galaxy empire,
Mhm.
and the whole plan that he set out lasts for like 1,000 years. But the point is, it's so interesting to read like nonfiction because it has characters, it has the plot, it
You mean the
has
fiction?
fiction, yeah,
Yeah.
it has a character's plot, and it genuinely catches your interest. Whereas with nonfiction, I mean, it may catch your interest as well, but it's like you still have to dedicate time to it and like make
Mhm.
yourself push yourself, force yourself a little bit to start reading, right? Whereas like with fiction,
Mhm.
it's the opposite, and I really like it, and that gets me not distracted, but like gets me to kind of push myself away from everything and just
Mhm.
kind of gets my mind into that book, and I like
Yeah.
that feeling.
It's interesting how it works.
Yeah, no, for sure. But with habits, what do you think? How do you make them? I would say, how do you make them last on a continuous basis? Because I find that really hard.
Which ones? The reading ones?
Anyone's, I for example, whenever I have a goal of, let's say, getting fit, and you
Mhm.
probably remember that time when I was like working out a lot. And I still I still take those Muay Thai classes, but for me, it's hard to like do that continuously for forever,
Mhm.
right? I probably can last for a month, but then after that, I kind of lose my focus,
Mhm.
and it just becomes boring too.
Hmm. Yeah. Just it's a whole topic that you have to like study and see what works for you, what doesn't work for you. But mainly you gotta make like your lifestyle. So like
Yeah.
you gotta be it and then to do it, I think. So like I read this Atomic Habits book,
Mm.
and one of the thoughts was I think it was there that you have to declare to the world kind of and to yourself that you are, so like for example, you are not a person um, who would like to get fit and go to the gym every 3 days a week, let's say. You are an athlete, let's say.
Huh.
So you gotta think of like your self perception should be like of a person who always goes to the gym and who's an athlete, let's say.
Got it.
So
Interesting.
and then it kind of makes sense for you to go to the gym, like because you are that guy. And you, whenever maybe you meet somebody, you tell them, I'm that guy. I'm the guy who goes to the gym and works out and who's fit. I'm not the guy who's trying to get fit. I'm not the guy who's trying to go to the gym three days a week. I'm the guy who's there. Kind of like that.
Yeah. Yeah.
Also helps to enjoy it. Kind of find the way to do it when you enjoy it. So you go to Muay Thai always, right? So you pretty
Yeah.
much don't skip any of the workouts there. So like I guess you enjoy it. So
Yeah. No, I like it. I mean, it's I like because I'm learning something new, and just but it also
also camaraderie helps. So if you have buddies who go
Yeah.
like gym buddies, that's like the best thing. If
Yeah. 'Cause
if you
can
both
push your
committed,
Yeah.
if you both athletes, people who always go to the gym never skip. So like,
Yeah.
and you can keep each other to that standard. Yeah, bodies, self-identity. That's why I mean they talk about self-identity in money too. Like some
Like
certain
just act like
mindset.
you're rich already.
No, not even that, but yeah, you gotta
It's like fake it till you make it approach, sort of.
not really. I don't know. It's a little bit different. I don't know how to. So it's a chicken and egg, right? So like, you cannot really declare that you are a person that goes to the gym all the time if you never go, right? Won't believe it yourself.
Yeah.
But you like unless you do it, you're also like probably not gonna go all the time. So it's an interesting dichotomy.
Yeah. Yeah. No, interesting. Should definitely try that.
Yeah. What else? What else could you do? Make it as simple for you to kind of keep up that habit as possible. So like going to the gym. I don't know. Make it that the gym is right by where you live.
Yeah. Yeah.
And
Throw out all the fast junk food out of your house.
no, I mean I don't know how does that help, but
Eat less.
with the food like habits, then yeah, it of course helps. Like to not even have it, maybe to go to the only go to the Whole Foods where they don't really even have junk food.
True. Yeah.
Like the only grocery store you go to is the Whole Foods, and when you get there, there's not that many options to screw it up. So you could do that, but it's expensive.
Yeah. Yeah. I'd also add don't focus on or don't create too many habits at the same time, because like how a person wants to start having or wants to change and like start over, and then they suddenly they like start going to the gym, they start like reading books, and then they do, I don't know, wake up at 5 a.m. and then
I've been
don't
there.
drink.
I tried that. I tried it all at the same time. Yeah,
And it's
also
it's,
started
it's
business
hard.
at that same time.
Start business. It's just, I mean, you can probably last for a couple of weeks,
Yeah,
but then it's tough. And
but
the thing is, if you give up one thing, like you're just gonna give up on everything.
But there is also a different school of thought where you should actually change like the approach entirely, and actually change completely, and do whatever you described just now.
Really?
Yeah. So like you become a different person kind of, and like I don't know.
Yeah. No.
But I definitely heard something like do it all at once and just never look back. Some approach, but I think it's
depends on personality too.
yeah, it depends on personality. It's kind of harder. I don't know. I don't know which approach I would recommend, but whatever works for you is not an answer I would accept either. So,
Yeah. Cool.
Yeah.
So I guess to kind of summarize, what are we?
To summarize, new table, recession, everybody's fucked. Learn new things and
Save up.
read books and learn new habits.
Yeah.
Read the book Atomic Habits or Power Habit. Those are pretty good. I forgot most of what I read there, but they are pretty useful.
That's another problem that I have.
Yeah.
Reading a bunch of books and then forgetting all this stuff.
Okay. Yeah. Thank you, everybody.
Cool.
Don't forget to like, subscribe, follow, share,
comment.
Find us on Spotify. I like it there too. We have 0 views on Spotify so far. I actually uploaded all of the episodes you probably see on YouTube are on Spotify. So if you're driving somewhere,
Nice.
turn it on.
Nice.
Yeah.
Awesome. All right. Thanks, everyone.
Thank you.